Hey, welcome to The Explainer. So if you just glanced at the stock market this week, you'd think everything was great, right? Everything finished in the green. But you've got to look a little deeper, because underneath that calm surface, there was this huge battle brewing between some serious optimism and some very, very real threats.
So, what do you make of that? Was it a winning week, or was it actually a warning sign? I mean, yeah, the Dow was up over 1.7%, the S&P 500 gained almost a full percent, but those numbers, they really don't tell the whole story. The real story is this deep conflict between what looked like good news and some pretty worrying signals hiding just beneath.
All right, let's get into it. The best way, really, to picture what happened this week is to think of a giant game of tug-of-war. Seriously, on one end of the rope, you've got the optimists pulling with all their might for growth. And on the other end, you've got the pessimists digging their heels in, pointing at all these major risks on the horizon. So who's on these teams, you ask? Well, on Team Optimist, they were celebrating a 90-day extension of the US-China tariff truce. That's a big deal. They also loved this stable consumer inflation report, which got everyone hoping, maybe, just maybe, the Fed might finally cut interest rates. But Team Caution had plenty of ammo. They were pointing to this huge spike in producer inflation, really weak consumer confidence, and of course, the constant threat of new tariffs just hanging over everything.
And the main battlefield for this whole thing? Right here in the U.S. economy. And what we saw was, honestly, a tale of two completely different inflation reports.
Okay, first up, the good news. This is what really got the market excited. The annual Consumer Price Index, the CPI. It came in at a nice, stable 2.7%. That was actually lower than a lot of people were expecting. So naturally, investors see that number and they're thinking, all right, maybe this gives the Fed the room it needs to start cutting interest rates.
But just as everyone was getting their hopes up, this next number comes out and yanks the rope right back in the other direction. We're talking about the Producer Price Index, the PPI. That's what businesses are paying for their supplies, and it jumped 3.3%. That is the biggest leap we've seen in over 2 years. And why does that matter so much? Well, because what businesses pay today often becomes what we pay tomorrow. So that number put a real chill on any talk of rate cuts.
So, the big question is, how did this economic tug-of-war affect actual, real-life companies? Well, as you can probably guess, it created some absolutely massive winners and, yeah, some pretty spectacular losers, too. Let's look at the winning side first. You've got Intel, soaring over 23%. And this wasn't just about making better chips or something. No, this was all about policy. News started swirling that the U.S. government was thinking about taking a direct stake in the company, to really push forward with their American manufacturing plans.
But then you look at the other side of the coin, C3.ai. It just plummeted, down more than 19%. Why? Well, their early financial forecasts came out, and the revenue numbers were way, way below what anyone expected. Plus, their operating loss was getting bigger, and that, as you can imagine, sent a real shiver through parts of the AI sector.
And then there's this, a perfect example of the raw power of investor confidence. United Health shot up over 21%. And the reason is so simple, yet so powerful. Warren Buffett's Berkshire Hathaway revealed it had bought over 5 million shares. Look, when an investor of that caliber makes a move like that, the rest of the market absolutely pays attention.
And wrapping up our losers, we have a huge one, Monday.com. It dropped over 29%. And what's crazy is that their recent earnings were actually pretty strong. So what happened? It was all about their warning for the future. They basically told everyone to expect slowing revenue growth and something called margin pressure, which is just a fancy way of saying it's going to be a lot harder for them to make a profit on what they sell come 2025. And that sent investors running for the exits.
Okay, but this whole tug-of-war thing, it wasn't just happening here in the US. Not at all. So let's zoom out a bit and see how these ripples spread across the globe.
That US-China truce? It definitely gave emerging markets a nice little boost. But at the same time, a huge shadow was being cast by some really weak economic data coming out of China. We're talking slower industrial production, slower retail sales, the works. But the real jaw-dropper, for the first time in 20 years, the amount of new loans in China actually shrank. Think about that. It suggests that people and businesses just don't have the confidence to borrow money right now. Meanwhile, the bond markets were kind of stuck in the middle of all this, but it was interesting to see high-yield bonds doing well. That tells us that, hey, some investors are still out there willing to take on some risk.
So, after a week like that, you've got to wonder, where does this tug-of-war go next? Who wins the next round? Well, there are 3 absolutely crucial events coming up that could very well decide which side gets the upper hand.
First up, tariff policy.
We're expecting the White House to announce the nitty-gritty details on semiconductor tariffs. Second, the central bankers. All eyes and ears are going to be on Fed Chair Jerome Powell's speech at their big annual meeting. Everyone's looking for clues about future interest rates. And third, what are people buying? We'll get earnings reports from giants like Walmart and Home Depot, and that's going to give us a direct pulse on the health of the American consumer.
And all of this leaves us with one massive question, right? You can see the market getting pulled in these two completely different directions. On one side, you have the incredible promise of game-changing tech like AI. But on the other, you've got all this friction from tariffs and global politics. So as we head into the next week, the real question is, in this huge economic tug-of-war, which side wins? Are you betting on innovation, or are you betting on politics?